I would like to start by thanking you for taking the time to attend Capcom's brief on our financial results. Today's presentation will cover three subjects: overview of our first half performance, our medium-term goals, and a progress report concerning our reorganization. My first subject is our first half performance. Sales and earnings were both higher than 1 year earlier. There were two main reasons for the increase in sales. One was the increase of 5.3 billion yen in the amusement equipments business, which was primarily due to the success of our Devil May Cry 4 Pachislo machine. The other is the 2.5 billion yen increase in the digital contents business, which was mostly due to the popularity of Monster Hunter 4 and higher downloadable content sales. Operating income was down 400 million yen in the digital contents business, mainly because there were no new hit titles in the mobile content category. But in the amusement equipments business, operating income was up more than 1.1 billion yen because of higher sales. Last May, we announced two medium-term goals. The first is the cumulative operating income of 70 to 80 billion yen during the 5-year period ending March 2018. The second is an operating margin of 20% in the fiscal year ending March 2018. After carefully examining these goals, we have revised the operating income goal to 80 billion yen and reaffirmed the 20% of the operating margin for the fiscal year ending March 2018. First, I will provide more information about the cumulative operating income target of 80 billion yen. Our plan is to achieve this target with earnings in each business segment as follows. Digital contents, 57.0 billion yen. Arcade operations, 8.5 billion yen. Amusement equipments, 30.0 billion yen. Other businesses, 5.5 billion yen. You may have difficulty envisioning this 5-year cumulative operating income goal. This table compares the average annual operating income in each business segment needed to meet this goal with our plan for earnings in the current fiscal year. Of course, earnings in each segment will fluctuate from year to year. Our outlook is based on the following assumptions: significant growth in the key digital contents business, a consistent performance in the arcade operations business. Current strong performance of the amusement equipments business will continue. Other businesses will generally be unchanged. Next, I will discuss in more detail our goal of the 20% operating margin in the fiscal year ending March 2018. Our plan is to achieve the following operating margins in each business segment: digital contents, 22%; arcade operations, 15%; amusement equipments, 27%; other businesses, 45%. This is a comparison with our operating margin plan for the current fiscal year. Naturally, we may not be able to maintain these margins in every fiscal year, but by combining these margins with the segment operating income information, you can see that each business is going in one of two directions. One is higher earnings along with a growing scale of operations. The other is higher earnings along with improvements in profitability. Our basic plan for each business is as follows. We are moving forward with the growth strategy that we announced in May, which involves improving the consumer business and strengthening the online games business. We plan to increase earnings by raising the profit margin to the level we achieved in the fiscal year that ended March 2012 and enlarging the scale of operations. We plan to hold earnings steady by maintaining the current profit margin and scale of operations. We plan to maintain the current profit margin by using this fiscal year's sales of titles as the benchmark. We also plan to increase the scale of operations and earnings by launching 4 new Pachislo pachinko machines every year. We foresee no change in the size of other businesses and plan to maintain earnings by improving profitability. We have already explained the specific initiatives that we plan to use to achieve these goals in May. You will hear an update concerning these actions afterward from the President. When we reduced our forecast on April 18th, we announced a shift in our strategy that involves strengthening our digital strategy and shifting from outsourcing to internal production. We are reorganizing our operations in accordance with this strategy. In Japan, development operations previously used a horizontal structure. This was based on job categories and earnings were overseen for each title. Now we have a vertical structure in which profitability is managed for departments similar to an internal company system. Our markets have changed dramatically in recent years. To succeed, we must have the flexibility to adapt to changes along with the energy to break through and overcome major challenges. We plan to use our new vertical structure to make two improvements. First is creating more hit titles by fostering more competition among different sections of Capcom. Second is increasing earnings by clarifying responsibility for earnings. At overseas subsidiaries, the primary function has been shifted from sales to marketing. This is because our business model is moving from sales to operations. As a result, our marketing skills will significantly influence earnings. For example, we have to constantly analyze shifts in users' needs and reflect those changes in our games. We are realigning functions and combining and closing business sites. This is taking place mainly at sales operations at subsidiaries in North America and Europe. In North America, actions were completed in the second quarter, and the European realignment will be finished by the end of this fiscal year. This completes my presentation. Next, the President will now provide you with a further explanation of our strategies. In my presentation, I will talk about our first half business segment performance and our strategic goals for each segment. I will begin with a progress report concerning the two growth strategies we have been pursuing as the most important measures for achieving our medium-term goals. The first is improving the consumer business. We anticipate slow growth to continue in the home video game market, which includes digitally distributed content, DLC. In addition, the consumer business is where we create the content for our businesses. As a result, we will continue to place emphasis on this business. We launched Monster Hunter 4 on September 14th. As of October 15th, shipments totaled 3 million units, including full game download sales. This figure was 3.3 million units on October 25th. Overall, this title is performing very well because of the strong response it generated among users. As you heard from the chairman, we are making progress with our reorganization. In consideration of the volatile market environment, Capcom must create successful new titles and shift from selling products to performing operations. To accomplish these goals, amid the rapid pace of change in our markets, Capcom is altering its organizational structure and shifting the role of overseas subsidiaries from sales to marketing. The second goal is strengthening the online games business. Just as in the consumer business, we will continue to use numerous initiatives to grow in the online content sector too. In the first half, DLC sales were up by more than 150% from 1 year earlier to 5.4 billion yen. Full game downloads of Monster Hunter 4 were one reason for this growth. Furthermore, in August, we announced 14 online game titles that we plan to introduce starting in the second half of this fiscal year. My next subject is an overview of our business segment performance. In the consumer business, profitability improved because of the higher share of sales from DLC. However, there was a clear divide between successful and unsuccessful titles. Monster Hunter 4, a major new title of this fiscal year, has performed well. The game has been sold mainly in Japan, which has high profit margins, and has raised the share of sales from full game downloads. In addition, Resident Evil Revelations became a million seller, and Dragon's Dogma Dark Arisen sales have been in line with our plan. But sales of Lost Planet 3 were only about 300,000 units because of weakness in Europe and North America. Sales volume in the consumer business was down for packaged software due to the strong sales of a major title 1 year earlier. But for full game download sales, volume increased because we reinforced our digital strategy. We launched 20 titles in the fiscal year's first half. Packaged software sales volume in Japan was up 2 million to 3.8 million units, mainly because of Monster Hunter 4. Overseas, packaged software sales volume was down 1.5 million to 1.6 million units in North America, and down 1.2 million to 1.1 million units in Europe. Strong sales of Resident Evil 6 1 year earlier were partly responsible for these declines. In Asia, sales volume was unchanged. For full game download sales, volume was up 1.2 million to 2 million units, mainly because of the popularity of Monster Hunter 4. In the mobile content sector, growth is slowing in Japan and overseas, but the PC Other sector is performing well, chiefly for major titles. Mobile content's performance was lackluster throughout the first half due to the absence of new hit titles for both the Capcom and Beeline brands. However, for the Capcom brand in Japan, we are starting to introduce native apps like Auto Ranger. In PC Others, the main title, Monster Hunter Frontier G, was upgraded to a G2 version in July and a G3 version in October. These steps to further energize this game led to growth in the number of users. In Asia, Capcom's Taiwan subsidiary started distribution in April of Onimusha Soul, a PC browser game that is selling briskly in Japan. Initial results are strong, including a #1 popularity ranking. In China, the development of the joint title, Monster Hunter Online, with Tencent Holdings Limited, is going as planned. We conducted a closed beta test in June. There was a temporary lull in first-half digital content sales and earnings. DLC continued to grow, but there were no hit titles in the mobile content sector. As a result, first-half sales increased 2.6 billion yen from 1 year earlier to 37.5 billion yen, and operating income decreased 400 million yen to 5.3 billion yen. The operating margin was 14.3%. Packaged software sales increased 1.5 billion yen to 25.3 billion yen, and DLC sales increased 3.3 billion yen to 5.4 billion yen. Monster Hunter 4 was the main reason for both of these increases. In the mobile content sector, sales fell 2.4 billion yen to 3.6 billion yen because there were no hit titles. PC Other sales were basically unchanged at 3.2 billion yen. Earnings were down despite higher sales because of a decline in the profitability of mobile contents, which has a high profit margin. This slide outlines our second-half strategy for the digital contents business. In the consumer business, we are concentrating on repeat sales of major titles and on increasing digital sales. We will continue to conduct promotional activities for Monster Hunter 4, which performed well in the first half. In addition, we will hold user events like the Monster Hunter Festival and collaboration with Universal Studios Japan starting in February 2014 in order to further increase sales. The objective is to maximize sales volume of the entire Monster Hunter series. We plan to start selling Dead Rising 3 for the next-generation Xbox One in Europe and North America in November 2013. Our sales plan for this fiscal year is 1.2 million units. For DLC, our goal is to raise the DLC sales ratio in the consumer business by increasing sales of full game downloads and additional DLC. Based on first-half sales, we have revised our initial plan for the fiscal year sales volume in both packaged software and DLC categories. We expect to increase the number of titles to 40, which is 10 more than in the initial plan. For regional sales volume of packaged software, there is no change in our outlook for 6.3 million units in Japan. Overseas, we have reduced our initial plan from 4 million to 3.5 million units in North America and from 2.4 million to 1.9 million units in Europe. These cuts reflect first-half sales of Lost Planet 3 and other factors. In Asia, there is no change to our initial plan. Our initial plan for full game download sales was 3.2 million units. We have raised this by 800,000 to 4 million units because of strong first-half sales. This slide shows our second-half strategies for mobile contents and PC others. Our goal is to create more hit titles. One way is by launching full-scale native apps that use existing brands. We also plan to offer major titles for many types of devices and strive to develop hit titles. In the mobile content sector, for the Capcom brand, we will introduce a large number of native apps that use existing intellectual property. For example, distribution of Monster Hunter Smart is scheduled to start in the fall of 2013, and we plan on distributing many more titles. One of them is Crossbeats, which we exhibited at the Tokyo Game Show. For the Beeline brand, we plan to introduce a number of titles. One is an iOS version of Kiwi and Me, a new puzzle game targeting casual female users. The launch is to take place in December 2013. In the PC others, we are working to offer the core Monster Hunter Frontier G title for many platforms. We will begin services for PlayStation 3 and Wii U by the end of this year, with the goal of increasing the number of users and earnings. In addition, we plan to officially start services in December for Eurohistoria, which is a new original PC browser game. My next subject is our fiscal year plan for the digital contents business and the categories within this business. Due to performance in the first half, we have revised the fiscal year plans for the consumer and mobile contents businesses. For the digital contents business, we have lowered the fiscal year sales plan from 64.5 billion yen to 63.0 billion yen, and the operating income plan from 9.1 billion yen to 7.8 billion yen. In addition, we expect an operating margin of 12.4%. Looking at category fiscal year sales plans, packaged software was lowered from 36.5 billion yen to 35.5 billion yen. DLC was raised from 6.0 billion yen to 7.0 billion yen. Mobile contents was lowered from 12.5 billion yen to 11.0 billion yen. And PC Other is unchanged at 9.5 billion yen. This slide provides an overview of the arcade operations business. The operating environment remained challenging in the first half. Although existing arcade sales were down from 1 year earlier as a result, we held earnings steady because of rigorous cost management. Existing arcade sales were down 5% from 1 year earlier. One location was added in the first half, which raised the number of arcades to 35. As a result, first-half performance was about the same as 1 year earlier. Sales were down 200 million yen to 5.4 billion yen. Operating income was 900 million yen, and the operating margin was 17.9%. This slide summarizes our strategy for the second half. We have not revised our fiscal year plan and are aiming to hold earnings steady by operating arcades efficiently. In the second half, our goal is to maintain earnings by continuing to use strict cost management. We will also take steps aimed at serving more customer segments. For example, arcades are holding hands-on tours for seniors and operating kids' corners with fees based on time. In the second half, we plan to open 1 arcade and close 2, resulting in 34 arcades at the end of the fiscal year. In addition, there is no change in our existing arcade fiscal year sales target, down 1% from the previous fiscal year. Overall, there is no change in our initial fiscal year plan for arcade operations. We expect sales of 11.0 billion yen, operating income of 1.7 billion yen, and an operating margin of 15.5%. Next is the amusement equipments business. First-half sales and earnings were much higher, mainly because of strong sales of Capcom Pachislo machines. In the Pachinko and Pachislo business, sales of the Devil May Cry 4 Pachislo machine, which was launched in September 2013, have reached 25,000 units. This machine is still performing very well. The subcontracting work also contributed to earnings in this business. In the arcade game sales business, we started selling a new coin-operated game called Mario Party Fushigi no Koro Koro Catcher 2. This machine as well has been performing well. As a result, first-half sales and earnings were higher than 1 year earlier. Sales were up 5.4 billion yen to 8.9 billion yen, and operating income was up 1.2 billion yen to 2.5 billion yen. This results in an operating margin of 28.2%. This slide shows our amusement equipment's business strategy in the second half. The fiscal year plan has been increased because of the strong first-half performance. In the P&S business, we will launch the second Capcom Pachislo machine of this fiscal year. We plan to start distributing this machine, which uses our primary brand, in the fourth quarter. In the arcade game sales business, we plan to start distributing Monster Hunter Metal Hunting Compact, a new coin-operated game, in the spring of 2014. As a result, we are aiming for higher sales and earnings. We have raised the fiscal year sales plan from 18.5 billion yen to 20.0 billion yen, and the operating income plan from 4.3 billion yen to 5.5 billion yen. This results in an operating margin of 27.5%. My last topic is our consolidated forecast for the current fiscal year. We have made no revisions to our initial plan. In the second half, we are concentrating on repeat sales of Monster Hunter 4, offering Monster Hunter Frontier G for many platforms in the online games business, and selling the new Capcom Pachislo machine. Additionally, in the packaged software business, we will introduce numerous sequels using major intellectual property like Dead Rising 3 and Sengoku Basara 4. Our fiscal year outlook is for sales of 97.0 billion yen, operating income of 12.0 billion yen, ordinary income of 11.7 billion yen, net income of 6.8 billion yen, and net income per share of 120.61 yen. We plan to pay an interim dividend of 15 yen and a year-end dividend of 25 yen for a total of 40 yen. Everyone at Capcom is determined to reach the numbers in these plans. Thank you again for attending today's meeting.